The visual I'm about to show you is going to be a game changer for all your clients who are just starting a business. It's a visual roadmap of what they need to do to get from novice business owner to savvy business owner. And if you like what I'm about to show you, I'll give it to you. Just comment savvy and I'll send you a PDF version of it. I'm an enrolled agent with 20 years of experience in taxes and owning my own firm. I recently just sold it, so now I'm ready to share all my secrets and experience with other tax professionals. A lot of business owners, even business owners that have been open up for years, still don't really know where their business stands. And if they don't know where they stand, they don't really know where to go. It's like if I need to go to Kansas City to watch a Kansas City Chiefs game, but I don't know where I am in the United States, I really don't know what directions to start even heading. Let's give our business clients the direction that they desperately need so they know exactly where to go. With my business client, especially my new business clients, I actually sit down and talk to them about the 4 stages of being a business owner. And once we go over, I ask them, which one do they think they're in? By going over this, they know exactly what not to be, which is the novice, and exactly where they want to be, which is a savvy business owner. Now, here's the visual that I share with the clients where it shows them 4 different types of business owners, and they have to pinpoint exactly where they are. And from there, by knowing where they are, they'll know exactly what's the next step that they need to be at. So if they're a novice business owner, we're going to try to move them over to a typical business owner. And from typical to responsible, from responsible to savvy. And I have a slide for each one of these that we could share with the clients, and they'll see exactly which one do they fit into. And the first one I'm going to go over is a novice business owner. This is usually the typical, maybe an Uber driver who's just starting for the first time, someone who's consulting for the first time. They're really eager to start the business, and taxes is probably the last thing they're thinking about. They're not thinking about anything when in regards to taxes. They're just happy that they're making money. So what happens is that they're usually a sole proprietorship. They had the money deposited into their personal bank account, and then they use that to pay their bills. And they're actually spending the money as fast as they're earning it. Now with the novice business owner, this is where we don't want clients to be at all. We don't want them to put money into their personal business account. They're not really tracking expenses. They're not putting money into any retirement accounts. And especially they didn't even save money for taxes. So in this case, usually for new clients who come in saying that they just started a business and they made all this money, this is usually what happens. And I ask them for expenses. They're like, oh, I didn't keep track of anything. I didn't keep track of mileage. I didn't keep track of home office, anything like that. So that's usually a novice business owners because they're not expecting anything about taxes. And then all of a sudden we prepare the tax return, they have a huge profit and they don't have any money for the taxes because they spent it already. And then when you bring up retirement funds, they don't even know anything about that because they weren't informed about it. And they don't even have the money to put into a retirement fund either. Clients should know that they do not want to be a novice business owner. Instead, if they are like this, we're gonna move them over to the next one, which is called a typical business owner. And with a typical business owner, they're gonna have a little bit more things to consider. And the most important thing is that with these red arrows, that means it's the new items from the previous one. So the new item here is going to be that they're going to have a business bank account now. So money coming in will go into the business bank account, and they're going to keep track of business expenses. So money coming out of the business account should be paying out expenses. And also if it goes to their personal accounts, once they take out their profits, it goes to their personal account. They're going to be able to actually start funding a retirement account. So they'll pick the retirement account they want, whether it's a SEP IRA or a solo 401k, depending on their preference. But it's important to know that as a typical business owner, they have a separate business account now that they're going to be paying expenses out, and they're also considering retirement funds. So hopefully they are set up to have a retirement account and they can put money towards that as well. And with these typical business owners, once they put the max into their retirement account, it brings down the profit low enough where the taxes is manageable. But hopefully, of course, that the profit's going to go up in the future. So if they did all of this right now, they set up the account, they're all funding their retirement accounts. Now, what's next? What's the next type of business owners that we should be aiming for? Now, the next one is going to be the responsible business owner. The responsible business owners is that, everything's the same as the previous one. The only difference is that one, they're going to have a savings account on their personal side. So that's more of a personal preference where they'll be able to they're making more money and they're just putting more money towards a savings account and actively knowing that they should be saving just for a rainy day. And the next thing is that they're going to have a tax account, a separate account just for taxes. And this actually follows the book called Profit First, where he explains that everything should be separated into multiple different accounts to make it easier to track, to make it easier to budget. And one of those things would be a tax account. And this is important because as they're making more money, they need to be aware that they're going to owe taxes. Even though if they max out their retirement account, even though we did everything with business expenses that we could do, if they still show a profit, they're still going to have taxes, and that it's important that they know that they have money saved up for the taxes and it's going to get paid to the IRS. So making sure that clients understand that it's nice to have a separate account just for taxes, because they don't want to be surprised when we prepare the tax return. Even though they did everything that we told them to do with expenses and retirement accounts, there's still a profit that they're going to be paying taxes on, that they should have the money ready to pay the taxes. Now, once it's clear that the client has been doing all these so far, they have the tax account, they have their savings account, retirement, business expenses, everything is in line right here. They're doing all these already. Now next, they want to become a savvy business owner. And this is where I tell them that this is what we need to do to become a savvy business owner. And I'll start off on this kind of going this way, where first off, as a savvy business owner, you're usually going to be an S Corp, because this is where you're going to show a higher profit. So an S Corp would probably be good. Then you're going to have an S Corp business account. And with this business account, you're going to still do the same thing, pay expenses out of it. You're going to have a tax account that's going to, if you know your profit, you're going to put money towards it, so you know you're going to be paying taxes for that. And the money is actually going to go to your personal account. And from the personal account, of course, you're going to pay regular bills. You're going to have a savings account. But now, thinking a little bit extra, let's have an investment account. An investment account's going to be the backdoor Roth, which is already set up from the previous side. And then we're also going to have a stock account and maybe a rental home. Now, the next thing that the client should be setting up is actually a side business, where the S corporation is paying this side business. You could call it a family management business or whatever you want to call it, but it's pretty much a sole proprietorship that's going to allow you to shift some of the income, the S corp income, over to the side business. And by having a side business, you're able to open a health reimbursement arrangement account or pay your kids. And from paying your kids, you could do a kids Roth or a 529 plan. So having this set up will just move money from the S corp, from the profit, allowing you to deduct all these different things that you can't really do to the S corp directly. Whole another video on this one, but setting up some kind of sole proprietorship side business that allows you to do all these right here. The next thing is that from the S corp, you're going to actually have a retirement account through the S corp itself, whether it's some kind of form of 401k, whether it's a solo 401k or a regular 401k. You're going to have some kind of retirement account from the S corp as well. And then also the S corp should have a business savings account. It's going to allow them to have a nest egg to grow the business. So if there's a big expense later on or something that they want to maybe expand into, that they have this business savings account ready, so at their disposal, so they could use that. And the next thing is that, are we taking advantage of Augusta rule for the S corp as well? So seeing all this is what it looks like to become a savvy business owner. And this slide right here is probably the main slide I would share with the client, because I made it white and made it black so it's easy to print. And when you print it out, you could share this with the client saying, okay, this is exactly where we need to be. And do we have all these to be considered a savvy business owner? And what I would do, I'll go through each of these one by one with the client personally. So I'll say, okay, you have the S corporation set up. Perfect, I crossed that out. So remember, this is on paper. So in the office, I will actually just cross it out in front of the client so they know exactly that they've done that already. Did they have the S corp business account? Yes. Did they have that? Yes, yes, yes. So we go through every single one. And if I know that they have it, then we go through that. And maybe here it's like, okay, you don't have a rental property yet. Maybe that's something to consider. You didn't set up the side business account for the sole proprietorship yet, and you're not paying your kids yet. So, okay, we'll try to tackle that later. I know you're paying yourself for retirement, 401k through your S corp, and I know you have a business savings account that you're slowly adding in. And also, I know you're not doing this Augusta rule. So by exiting it out, we see exactly what is it that the client still needs to work on? What is it the client still needs to do? So out of all these three, I know the client, okay, is going to need to set up a sole proprietorship, maybe look into rental and the Augusta rule. So knowing that there are still three items that we could tackle to become the savvy business owner, we could go through it with the client and see which ones are the most important that we should be tackling right away. And maybe the rental property, this is something that's not really urgent or immediate and something maybe further into the future for the client. So we could just kind of leave that on the side for now. But between the Augusta rule and the sole proprietorship business or the family management business, which one is the most urgent that we could try to get the clients to start doing now? And maybe for right now, the Augusta rule, we still have some time in the year, so it's not something that we need to do right now immediately. But I think it's important to actually start this family management business so we can start paying the daughter out, so they can start getting that deduction right away. So out of the three of these, I think the most urgent thing to really let the client know about is, say, this sole proprietorship or family management business. So we could start doing the HRA if there's any health costs coming up. We could start allocating money to paying their daughter or their kids. And then from there, we could start moving money to their Roth and 529 accounts. So using this visual, it's a very important way to let the clients see exactly what is it that they need to do. Checklists and a document is nice and all, but I feel that this visual actually paints it out so they can see what is it that they have, that they accomplished, and what is that they still need to do. If you found this video helpful, just give it a like. And if you want a PDF copy of this visual, just type Savvy in the comment and I'll send one over to you. Also, if you're a firm owner with employees, share this video with them, because my goal is to level up your employees. By leveling up your employees, they're able to take on more work, they're able to interact with clients better, and also it's gonna take work off of your plate as a firm owner. Thanks for watching, and make sure you give us a follow where you can get more tips and more visuals that will help simplify the taxes.